Good afternoon, traders, and welcome back once again to the Hot Stocks Outlook for June 23rd, 2017. As always, hope you're having an excellent week out there in the markets, and we've got a lot of really great things to cover because there's just been a ton of volatility in the market. So a lot of stocks doing very well and some stocks doing extremely poorly. But really, regardless of the markets you trade, obviously, you got to have the right approach and the right tools to know what to anticipate and put those orders in and really see that expectancy play out and make money with your trading strategy. So I want to go ahead and we'll start here with Louisiana Pacific. We've got American Express here, Cheesecake Factory, and a couple of retail establishments, so Francesca and TJX Companies. So let's go ahead and dig right into it. So Louisiana Pacific here, want to go ahead and actually explain each indicator on the chart here. And I want to just conceptually just move forward with 3 easy ideas for how to utilize the software and anticipate these trend changes and opportunities in the market. What we have at the top part of the top half of the chart here, this is trend. So this is our predicted moving average against the price data. We compare a predicted moving average, this blue line, to a actual moving average, which is really just a summary or really a lagging indicator of what's already occurred in the market. So what we understand with Louisiana Pacific here is when that blue line crosses above the black line, the trend is up. So as a trader, you're looking to go long the market in Louisiana Pacific here. So very, very basic, straightforward. Market's up about 7.5% since that crossover occurred there. Now, we also have this other indicator at the bottom of the screen here. This is the predicted neural index. Again, utilizing the artificial intelligence of the software. We don't need to dig into all the nuances here, but what is it predicting? Well, it's a very short-term indicator, and by short-term, I mean 48 hours. It's really looking ahead. 2 candlesticks is how you can think of it. So only 2 candlesticks ahead, strength or weakness in the market. And so you know what to anticipate. Is there strength over the next 48 hours in an uptrend, or is there a little bit of weakness within an uptrend or downtrend, whatever situation you're working in? So again, very, very basic. And so what we see here is when you get that crossover, you want some confirmation, just makes sense that you're going to see some strength over the subsequent next 48 hours as well. But one of the most important thing about trading is really adapting to the market. And we're going to, look with these same ideas, same concepts as we do every single week, looking through a lot of these charts here. But one thing I want to point out here is if you're in an uptrend, right, and you want to buy the market, well, you need to know what levels should I be looking to buy in? Well, we also get a predicted high and low range for each trading day, and I can bring those up on the chart here. So I don't want to get too bogged down here with, looking at too many indicators and all these different things. But the whole point here is if you know the trend is up, over the next 48 hours there's strength in the market, you want to be buying at these predicted low levels and targeting these predicted high levels. So regardless of what your short-term trading strategy is, these are the levels that are really standing out to you as far as entries and profit targets if you want to go ahead and trade Louisiana Pacific short-term. And what I'd even point out, and a good thing to understand moving on to more of these charts is, when you get that neural index down to 0, sure, you get that weakness and you hit that predicted low level, but the trend is still very much to the upside in this case, right? So obviously expecting that weakness, but for a good chance to buy into an uptrend there. So let's go ahead and look at some more charts with that understanding and just simply combining these 3 indicators to keep us on the right side of the market so that when we're getting all this volatility in stocks and some stocks exploding, other things crashing down, we're leaning with those trades and making intelligent decisions that match our time frame. Here in American Express, so very popular company here. Remember this logic of we've got a predicted moving average and an actual moving average. Well, here's where we actually get the moving average moving above. So we get a tiny little bit of crossover, but very, very flat, essentially, right up against each other, right? You also have the neural index up at a 1, but then goes down to a 0 here. So we see the predicted moving average is flat. The trend is forecasted up, but you're getting that weakness over the next 48 hours. And look how this market trades moving forward. So with this predicted high and low range, we know the trend is going to stay up. How would we have traded this knowing short-term weakness and strength with the neural index and predicted high and low range? We'll go ahead and bring up the shorter term tools here. Knowing the trend is up, we can see that clearly that blue line stays above the black line. Well, we want to keep buying at these levels in an uptrend, right? So possibly buying there. We see we close above that level, buying the market in an uptrend, buying the market in an uptrend. over the short term, trying to hit these profit targets as a predicted high. So any short term where you have a large position on and you want to go and unload that at a good intraday price, target those predicted high levels is a great idea as well. But very simple logic of trend, short-term strength or weakness, and predicted high and low range. And that's really your guide. So, if you've traded the market at all, you really understand there's a lot of different strategies, a lot of different approaches, a lot of different time frames, but you need a tool that's going to let you know, hey, what should I anticipate in a market moving forward, so you can adapt that trading style and pull the most out of the market that you're trading. Let's go ahead and look at Cheesecake Factory here. So absolutely love the Cheesecake Factory to eat there, but stock definitely do not want to be buying over the past couple of weeks here. The trend is to the downside. Here's your neural index matching that weakness. So you get a strong signal that says, pay attention to Cheesecake Factory. So let's bring up those predicted high and lows, knowing again that this market is in a downtrend for the duration. We're not going to get a crossover there. So let's go ahead and bring this up. Trying to short at these predicted high levels. So shorting the market, staying with that downtrend as long as that predicted moving average remains below the actual moving average. And the reality of this is that when the volatility really starts to come into the markets, and I touch on this almost every week, is there's no trading happening here. You needed to be shorting the market at these really great levels to capture essentially the move, the trend here. So that one day is about 10% of the move happens in one day. The trend continues and you're down about 15% from some of these levels. But of course you want to stay short, whether it's an option strategy, whether you buy and sell the shares, whether you're short term, longer term, making sure that you stay in line with these overall forecasts and trade that way, utilizing the tools and staying true to how you like to trade. Francesca here. So some of these retail companies here, and again, keeping this very, very simple, trend to the downside, neural index match that. And so we want to use those predicted high and low levels and trade with the trend, right? So we bring those up. Where do we want to short? You see how good these intraday levels are, so that, in worst case scenario, the blue line comes above the black line. You've gotten such good intraday levels that it doesn't really affect you very much. You may take a very, very small loss here. Actually, if you had a resting order, you get filled way up there. But you're not having the market move aggressively against you. And if you're taking those short-term profits, you're hitting on those short-term profits as well. So able to get out of those positions with some money in your pocket as these markets move lower and stay with that overall downtrend. So last opportunity here to take a look at TJ Maxx. And again, same logic, keep it very simple and straightforward. Let the software really do that heavy lifting of what do I, want to make my decisions here. Trend to the downside, neural index down at a 0 here as we come into the trend. We're going to get that short-term strength and weakness, but we understand that we want to be shorting at those predicted highs, utilizing these levels to short the market in line with that downtrend. And so a really nice opportunity thus far. About 7% to the downside there in TJ Maxx. But again, if you trade options and some of these other strategies, that is a tremendous opportunity to the downside. And you haven't had to risk a whole lot when you understand, essentially when this market is going to start trending higher. You have all those tools that are going to adapt and let you know how to adjust your position in those time frames and really, again, pull the most out of the market for whatever that strategy is that you like to execute and how you like to interact with the market. So as always, thank you all for watching. Be sure to watch some previous videos and watch the playlists that are available. Some videos go more in detail, looking at some of these predicted highs and lows and other things. But of course, you want to keep it simple. That's the whole point of having a tool like this. As always, thank you all for watching. Once again, this has been the Hot Stocks Outlook for June 23rd, 2017. Thanks again. Best of luck and bye for now.